Please subscribe to the channel and press the bell icon to be notified of the latest videos. I'm Sage for Kalkine Media, and in today's trending topic we're covering 7 ASX listed stay-at-home stocks for investors as different states of Australia witness coronavirus lockdowns. People are forced to stay at home. In such a scenario, people make more careful decisions in terms of spending. Here we look at ASX-listed stay-at-home stocks based on a year-to-date or YTD returns. That may be good bets for investors. Let's begin. IDP Education Limited. IDP Education provides international student placement services. The company last month announced an agreement to acquire the British Council's Indian International English Language Testing System, BCIELTS India. Operations making it the sole distributor of IELTS in the key Indian market. Analysts expect the deal to pave the way for further transactions in other countries. Next up, JB Hi-Fi. JB Hi-Fi Limited is an Australian leading retailer of home consumer products. In the financial year 2021, the company announced a 67.4% increase in profit, primarily supported by JB Hi-Fi's online business, which rose by 78.1% in sales. The company's board also announced a 107-cent per share final dividend, fully franked. Harvey Norman Holdings Limited. Harvey Norman is engaged in the business of selling furniture, computers, bedding, consumer electricals and communication products. The company has done well with stay-at-home orders during the lockdowns, seeing its profit before tax, or PAT, more than double in the first 6 months of financial year 2021. Underlying net PAT increased by 115.8%. Nick Scali Limited. Nick Scali doubled its profits and increased the final dividend for the shareholders. The company's sales climbed by 42.1% over the financial year 2021. The operating costs were primarily in line with last year. An underlying net profit after tax, or PAT, rose by 100% for financial year 21. However, the company didn't provide profit guidance for the first half of the 2022 financial year due to the ongoing uncertainty around the coronavirus pandemic. Temple & Webster Group Limited. The company's stock price picked up following sound financial year 2021 full-year results in July, and Temple & Webster Group achieved a revenue rise of 85% over the corresponding period of last year. The earnings were supported by a rise in new and repeat customers and average order values. The company also benefited from its accelerated online shift via the launch of mobile apps. Temple & Webster Group posted a record number of customers for the period, up 62% on year to 778,000. Adairs Limited. In financial year 21, the sales rose 28.5% compared to the prior corresponding period. Group online sales climbed 33.2%, representing 37.4% of the total sales. Underlying earnings before interest and tax, or EBIT, rose 97.3%. Statutory net profit after tax, or NPAT, surged 80.7%. Fully franked final dividends stood at 10 cents per share. Arctus Limited. Canberra-based cybersecurity company offers products namely Cogency Gov, Cogency Field, Cogency Cloud, Cogency App and Data Cloak. The company's revenue climbed by 80% quarter-on-quarter, with gross profit up 86%. The company cited key customer wins alongside rising annual recurring licensing revenue over the quarter as drivers of the growth. Hopefully that's been informative for you. If you do like the information, please like, share, comment on the video below, subscribe to the channel, press the bell icon, you'll be notified of the latest videos. But for more information, regular updates, please head to the website kalkinemedia.com. This is Sage for Kalkine Media.